this video, we're going to talk about the fib retracement. This is one of our trades that we did. Worked out really nice. You know, we got our last target. Moving up our stop loss. This is very important. And depending on what type of market you're in, depends on the strategies we use. So let's go ahead and just kind of clean this up a little bit. Now, this one is not a small market cap. It's 1.64 billion when we entered it way down here. So let's go ahead and just clear everything out. And one thing that we want to do, when I first look at this, you know, and the more you do this, the more you can just do this with your eyeballs. But we have a low and we have a high. I'm curious to see how much it will retrace. Did it go into the golden pocket? Did it pass the golden pocket? So one thing that I'm going to do is I'm going to come down here to the fib retracement. And this, whenever I click on any of my favorites on my toolbar, you'll see it light up over here on the left-hand side. So if you're ever curious, you can just click on this and then just identify it. Since I have a star by it, it's on my floating toolbar. Now, I always have my magnet tool on, and the tip for the fib retracement or fib extension is you need to have, one, your magnet tool on, and two, what are you using it for? Well, this one, I'm using the fib retracement to see how far how far it retraced. So let's go ahead and go to the very bottom of the move. So it was going sideways, and then I call this the boom. Then it moved up all the way to the high, which is this. So we get the lowest point and the highest point of the move. If we go to a higher time frame, for example, the daily, you can see that it's one move, all straight up. But when you go to the lower time frames, this is when you see all the ups and downs. So if you ever get kind of confused on how, you know, where to place it, do I do it here, or do I do it at a different level? Go to a higher time frame. It takes off all this noise, and then you can easily identify your lows and your highs. Same thing with trends, trend lines, anything that requires to where you have to do any kind of levels. I always recommend going to a higher time frame and working your way down. But once you get to the point to where, let's say I was on the 30-minute time frame, I can easily see that this is my point here and this is my point here. And I'm sure you can too. You know, this is your low, you have all this noise, and this is the highest point. So let's go back to the 4-hour time frame. And we can see here, let's go ahead and change this as well. So let's go to our settings, let's go to our style, let's go to undo reverse. Now, how did I know it was on reverse? Well, if I'm looking at these numbers, they should go in order from going, they should be going down. I'm sorry. Well, the 0.5 should be here. The 618 should be here. So that's what I mean when I say going down. Here we can say it's 618 and the 0.5. So this is actually opposite. We click on reverse and now it flips it. So now this is saying that this is 0.5, this is 618, and these are actually percentages. So from the very bottom to the very top, it retraced 38% when it hit this level. It retraced 50% when it hit this level, and then 61% when it hit this level. Now let's go ahead and take this off. We still have this on here, but I want you to notice this. This to me is amazing. Like the math behind this is just insane. And these Fibonacci was a genius. So from here to here, look where it stopped, 382. Then it came up. It could not break this level. It created a level right here. Coming down, it broke the 382. Now, do we enter this trade, which would be a safe entry? No. Why? Because it needs to break this level. So we don't enter unless it breaks this level. This is a safer entry. Now, can you buy down here hoping that it comes up? Sure could. You know, because now we have a double bottom or a W. However, this could be either you being a genius, catching the bottom, or catching a falling knife. And that's exactly what happened here. You know, you may have been stopped out. You may have, you know, maybe got liquidated if you're trading this on leverage. Now, the next one is this level. It came down, came up. So now this is our next level that we're looking at for it to break in order for us to enter the trade. Now, the lower time frame you go, the more ups and downs you get. So here you can see up, down, up, down. So right here, if you're on a lower time frame, you know, you're seeing this and you're thinking, do I enter? Well, it needs to break this level first. And then it's doing all these ups and downs, come down here, create this one. Okay, I need it. Once it breaks this level, I can enter. But it can continue coming down until it breaks that level. Right now we can see we're in the golden pocket. So here's the thing with the golden pocket. Generally, the coins will bounce in the golden pocket. Does it mean that it always will? Nope, because it could come down here to the 786 or even lower, take 100% of the run up. Now, this is just an area where the golden pocket, it's been coined that because usually, sometimes, it'll bounce in here and then break out. Now, could you enter once it breaks this level? Sure could. Could you enter once it breaks this level? Well, it's even stronger, not only because it's exiting the golden pocket, but look at all this resistance you have here. 1, 2, 3, 4, 5. 5 areas that it tried to break out and get support, but it couldn't. So now it came down here, and now we're looking at it. Now, of course, we don't know any of this happen. You know, we're in the trade or looking at this for a trade. Then it comes down, it comes up. Well, then now I need to break this level. And it comes down, comes up, breaks this level. Depending on how fast you want to enter, depends on your risk. The lower the time frame, the higher the risk, the higher the reward. The higher the time frame, the lower the risk, the lower the reward. Now, what do I mean by that? Well, if you're going on a 4-hour, if you want to wait for a 4-hour to close, more than likely the price already moved up 10, 15, maybe even 30% before you enter. Now, granted, it's safer because now you know, okay, we have a less likelihood of it going down because more time has passed versus it breaking here on the 5-minute, the 1-minute, the 15-minute, and you entering only to see it come down again and do a fake out. That is what I'm referring to higher risk. However, you enter a lot sooner, so you could potentially make more gains. Now, if you wanted to, because you're increasing your risk by entering so low, what you could do is put your stop loss, even though this is 10%, sometimes this would be 2%, depending on the coin and the movement, but you would have your stop loss not right on the level of support, but a little bit lower. You know, right here, this is where everybody's going to put their stop loss. So I would go just a little bit lower, maybe even 14%. And you'll notice that too. I'm not sure if you notice that, but let's say we put a stop loss right here because it's got nice cushion. The market makers know that the majority of people have this small little cushion. Come here, wick you out, stop you out, then go up. And now you have to chase it again or wait for another break. But if you have it a little bit lower than you would normally do, as long as you're okay with this stop loss, the amount that you're going to lose, then I would recommend having it, you know, around this area so that if it does come over here, maybe a little bit further wick, then hopefully you're still in the trade and then you can finally move it up at a later point. Now back to the pivot retracement. Let's see here. For the pivot retracement here, we're in the golden pocket. We could enter in this area, knowing because of this run up that we had right here, that the price may come down to about this level before going up. So this to me is extremely important, knowing as far as your entry and the potential retracement. Now, as far as this retracement, this move right here would be inside the golden pocket. And that all that means is the halfway point. Where's the halfway point between here and here? The run up right around here. The golden pocket, a little bit lower. So that's pretty much how the golden pocket works and how the retracements of possible retracements work, to where they could come down to about 50%, 50 to 61%. Now, there's a lot of times, especially these past few months, where they're only going down 38%, which would be about right here, before continuing up. This one went down a little bit more, right to the 0.5-ish area, coming up, and then now it broke this level. And let's say you start looking at it right here. Do you enter? Definitely not. Well, why did we enter here? One thing I love doing is giving you the whole thought process. The who, what, where, when, why. Why would we enter here, but not here? Well, the reason is we entered here because it broke this level. The candle closed above this level. However, we would not enter here if we just saw it. It's like, oh man, it's looking good. We have a low, we have a higher low. It broke this level. It's right here. You're not going to enter because of this. Look at all this resistance right here. So if the price comes up, we have a pretty good chance that we might do this before potentially breaking this level and coming back down. Maybe coming over here, doing this before it starts breaking up again. Now, because we know that information, what we're going to do is we're going to wait. We're going to wait to see what happens at the break of this level. So what we do is we put our alert just above these wicks and the candle bodies. We get alerted, and now we're looking at this in the 15-minute time frame or whatever time you're doing. For me, I'll do the 15-minute just so I can try to get in a little bit sooner. So I'd enter the trade, alert goes off. I wait for a 15-minute candle to close above this 0.5 level, since it's a level, or you can actually do a level by making sure the magnitude is on. And I would actually do this level right here. So I was going to use this, but I used my eyeballs, look to the left, and I can see that we have a perfect spot right here. So the 15-minute candle needs to close above this level. My alert gets hit. I look. This one closes underneath it. This one closes underneath it. This one's closing on top of it. Now we have this one. When this candle closes, I'm entering the trade. I'm reducing my risk by waiting a few candles to ensure that I don't see what could happen, because it's fighting. It's fighting in this area to maintain above this white line. It could come here, do this, get rejected over the 0.5, come back here to support before making the decision point. Is it going to stay in this zone before it either breaks up, or is it going to come back down and maybe revisit this area? And if it does come down, is it going to take this liquidity? So there's not a lot of ups and downs here. That's what liquidity is. We know the price, when it comes down, it's taking up this liquidity. And now, is it going to come down, do a candle, say here, and maybe a wick to take this little bit of liquidity? Or is it going to go up? This is why the alerts are so important. The alert goes off, price starts coming up, gets rejected right around here, the 382. Look at all this right here. This is what I want you to concentrate on. This is what I'm always looking at. Whenever I'm looking at levels to enter, levels for support, resistance, targets, stop losses, this is doing the exact same thing as it did over here. There's a lot of, it's small, but there's a lot of support resistance right in this area. So it comes up to this area. Now, because of this run up, I'm expecting it to come down 50%. This is on average. Sometimes it only comes down 38%. Here, it went up, it came down, touched the 38% mark, started coming up again, came back down to this beautiful, beautiful support. All this support right here, it's little, but all this support right here was all it needed to get a bounce. Now, let's say I'm looking at the price right now. Would I enter the trade? No. I'm looking at it right here. Well, why not? It bounced. It bounced off of this. It looks good. Look at all this liquidity that it could take. Doesn't mean that it will, but all this liquidity. I know it's getting kind of messy, but look at all this liquidity it could take. I would have to wait. Wait for what? Wait for the break of this level. Now, let's go ahead and just kind of put our magnet tool on. Let's see if this level matches. Nope. Nope. Perfect. So this level right here, and actually, we can actually bring it over here too. Can we bring it back? And this is why I love support resistance levels, is because you can actually see that it follows, like it right here. Perfect. It came down here, it stopped, went sideways, came down, and then you can see candle bodies a little bit. These candle bodies definitely, candle bodies. We have nothing really right there. Candle bodies right here. And look at this. It goes across. Perfect. This is why I love support resistance levels. So would I enter right here if I saw this? No, for reasons we've already explained. All this liquidity. But now once it breaks this level, and of course here, I would have my alert just above this wick. Because all the wicks and candle bodies, they serve as resistance as the price is coming up. All the wicks and candle bodies, they serve as support as we're coming down. Now, I'm looking at this. I have my alert here. It comes up. It hits my alert. Do I enter? Nope. 15-minute candle did not close above this level. And this is why I'm always saying we have to have the levels, the candles close above certain levels to enter the trade, because now it came down. And then what could have happened, it could have done this, and then maybe go up, and then maybe come down a little bit, and then now start going. And then of course, break this level. This is when we entered. Here it came up here to the 236. Beautiful. Just stopped right in this area, came down, found support off of our support level, came up. Now looking at here. So this is what I want you guys to do whenever you're looking at these charts, kind of see, would you have entered? Why and why not? And this whole thought process is really going to sharpen your skills here. And don't lie to yourself either. Like, just because you saw that it went up, yeah, definitely I'd enter here because, and then you start looking for reasons. No, based off of what you've learned, based off of the teachings, like, would you have entered here, and reasons why or why not? So let's say I'm looking at it right here. I see that it came down here, it bounced, and you know, I see it now right here. Could I enter? I mean, I could, because it may be trading in this range that might start forming, and I get it at the very bottom of the range. However, again, the safer entry is a break of this, because this is all resistance. So I would actually set my alert above this level. Now, granted, this is pretty close, but at least I can get in, and then I'll worry about this later. But if this was very close, or you just wanted it to be safer, then you would set your alert above this level. Now, one thing that you may come across, well, I keep on just going higher and higher and higher, and then I never get in. You have to make a decision. You have to jump in the water. You have to put your, get on the bike, do something to where you're actually taking action. Have a stop loss. Stop losses are extremely important. This will reduce your risk of losing, well, majority of your money. So here we're looking at this, and we're seeing this to where it's going up and down, up and down. It broke this level. So right here at this moment, I'm thinking, okay, this could potentially come down here. And again, this is the thought process in this moment. It's losing high, lower high. It's losing its momentum. This is the level that is key for me. It needs to find support here. If it does not find support here, then more than likely we're going to come and take this liquidity. More than likely. If it bounces here, well, then now it needs to break this level, which is a pretty strong level, before I can consider entering, knowing that I'm entering into a box or a zone. So the price came up, came back into the box, came down, created a lower low, not looking strong, continues to come down. Comes up, comes down, comes up, wicks, and then now we're at this point. Would I enter now? Good question. Would I enter now? Let's go ahead and clean this up just really quick. Let's select the first one. I'm going to hold down Shift, click on this. I'm going to hit delete on the keyboard. I'm going to do the same thing once again. I'm going to click on the first one, go all the way down, hold down Shift, then hit delete on my keyboard. And then one last time. There we go. All right, hide this. So would I enter right now? Well, there's a couple things that we can look at. We do have, let's use our trend lines. So here is our trend line. We come up here to this. And the more touches you have, the stronger the line. Depending on your mentor may say, well, you're not supposed to break through the lines. You have to do it like this. I kind of disagree, because we only have one touch and two touch, or touches. You come over here to this, we have candle body, and then some of these wicks barely go through it, candle wick. So here we have more touches. So we can use this, and then if you wanted to do like an actual pattern, you could do, I would say this, because we have more touches. I was going to go for this one, but we have a lot of touches here. So this would be a falling wedge. And the reason it's a wedge is because eventually these 2 points will touch. If it was a falling channel, then these have to be parallel to where it's not going to touch. Now looking at this, I do see that it's in this falling wedge. We have a percentage chance that it can go up. I know the percentages, but I don't like saying them because I don't like giving, I don't want you to create a bias in your head. Oh, 68% chance, 74% chance, 78% chance, 72% chance. I don't want that bias in your head. Just if it breaks, this is what we do. If it doesn't break, well, then this is what we do. I want that mentality to where it's an and if statement. If this and this happen, then we do this. So just kind of give you a heads up. All right, moving on. So right now I'm looking at this. I do see that it's coming down. Would I enter this trade? Not really. What if it comes down in here? Would I enter the trade if it came down to this area? You know, the lowest part of it? It depends on your risk. It really does. Because here we have support, which is good. So more than likely we can bounce. If it does, maybe do a wick. You know, it could come up. But by the same token, right now it's doing its pullback. It's taking back the liquidity. It took back all this liquidity right here. Now, what's to say that if it, you know, does come down here, we enter, it doesn't want to come and take all this. So what I want to do is there's several different things you can do. And this is the beautiful part about trading. There's no one only way to do it. What you could do is you could put a lower entry right here. And blue's always my entry. We could put a lower entry here. So it's right around this area. And then just to see if it hits, you put another entry down here. Now, we don't know that this last one will hit. This one has a higher chance of hitting, maybe coming down really quick, then coming up. Now you're in the trade. But if we do happen to get lucky and get this one, whether it's, you know, there's a flash crash or just the market dumps for whatever reason and then bounces straight back up, you're going to see these really nice gains. Now, one thing that I must stress, in the bull market, you are going to see pullbacks of at least 20 to 30%. On average, from the last bull run, it was around 25 to 33% of a pullback. So if you have this mentality of having lower entries or lower bids, and we happen to get one of those pullbacks, well, then you're in the money automatically. Within a few minutes to a few hours, you're up 20, 30%, because what happens is it's looking great. All of a sudden it dips really quick and then bounces right back up, only to get everybody liquidated or everybody's stop loss hit. While on the other hand, if you have lower entries, and this tip right here is a pro tip, you're going to see that there's going to be so many entries that potentially can make you a lot of money. Now, as far as the pullbacks, how many do I think is going to happen this cycle? I want to say between now and, depending on when you're watching this, I want to say between now and possibly April, May of 2025, we might have about 3 to maybe 4 of these pullbacks, 20 to 30%, average 25, 33. And then once we start going back up again, I want to say in June, July of 2025, then we're probably going to see, I want to say maybe 6 to 8 pullbacks. Just imagine if you had this strategy. Now, of course, this strategy I've talked about intensely for the VIP members. Matter of fact, I also have an indicator that is going to help out tremendously with the pullback scenarios, with the buying the bottoms and selling the tops. I do not want to get wrecked again. Last season, my first season, I got wrecked. I held way too long thinking and listening to everybody else. Oh, extended bull market, extended cycle. And I held and I sold 50% loss from my profits, 70% loss from my profits, because I was just waiting. I do not want that to happen, not only to me, but my community, whether it's in the VIP or you watching this show, watching this video. Now, this strategy is very, very easy. I talk about it all the time on my YouTube channel. Not only that, but I actually created an indicator for my VIP members. Now, this indicator will be for sale. So definitely watch me on my live streams. You know, I'll be giving more information about that as far as this indicator. For the VIP members, everything that I do extra, it's included in their price. I created a group that is going to see where the new money is going to go. And that's going to be our biggest opportunity, is for the new money, because all they do is buy green. So if we can buy these tokens before the tokens are released to these exchanges, they make it really easy for all this new money to come in, we are going to make an incredible amount of money. and I created a new group. I did not charge extra for it. It's not a $300 of one-time payment for this extra group. It's free. I've created a few groups or a few different ideas that was extra from the original group, and it's all included. Anything that I do, whether it's watch lists, indicators, any kind of training videos. I have a training video that is specifically for market structure. That one I'm selling on Patreon. However, my members get it for free. I have another video to where I do an advanced training course on leverage trading. I have two videos. One is more of a intro beginner type scenario, and then the other one is the advanced. Those are also included because they are members. I'm not trying to nickel and dime my members. There's so many other groups that will do that because they want to get rich off of their members. For me personally, I say this all the time. I want to get rich with you, not because of you. And for that reason, I'm showing you all these strategies. I want you to be very successful. I want you to change your life. I want you to just really have no excuses. That's what it comes down to. You know, some people can't afford courses. Some people can't afford groups. Some people can't afford none of that stuff. So what I do is I dedicate my time every single day, 1 hour. You know, right now the current times are Monday through Friday, 12 p.m. Eastern Standard Time, Saturday and Sunday at 5 p.m. Eastern Standard Time. There, you can ask me questions. You can ask me questions about trading. You can ask me questions about indicators. You can ask me about strategies, whatever you want. Like, there should be zero reason why you are not successful this season. Zero reason. Now, if you want to learn faster and everything else, well, join the group. If you can't or you don't want to, that's fine. Get your information from here. I'm one of the good guys. And there's a lot of people out there that they really don't care. They just want members. I'm just going to tell you, man, they just want members. But me, I want to change your life. All right, moving on. So here we could enter. Let's see here. What I would actually put an alert. So my initial thought is set an alert up here above this wick. Or now I got to move it up this way. But then we have levels right here. So I would actually wait. Now the difference in percentage, is it 20% from here to here? If so, well then I'll set my alert here. But I'm pretty sure it's not. It's only 1%. This one, it's only a total of 2%. We'll just call it 3. So by putting my area, let's call this 5. By moving this up 5% so I can get alerted, I am reducing the risk of getting stopped out. What do I mean by that? We buy the breakout. All these groups say buy the breakout, buy the breakout. You buy the breakout. I don't. You get rejected right here. I don't. I'm waiting. Or I'm in another trade. It does this, comes down here, buy the retest. Buy the retest. You buy the retest. I don't. Because I'm waiting. I'm waiting for my alert. Now it gets rejected here. Comes down, breaks this level, and then you have this level. Actually, it's like a little zone. You get rejected here. You bounce off of this level, comes up, you break this level. I'm in other trades. I'm making money. You already entered, you added to your entry, and you're waiting. You're waiting all this time to see, for you to finally make profit. And it does this, it breaks this level. It finally comes up here. It wicks. This is a candle. It wicks, and then it does this. And then finally it does one more retracement before it goes up. Now you're in profit. You're in profit was like 8%, something like that. Let's just say way up here, and you entered way down here. 9%, 10%. We'll call it 10%. You're in 10%. Now, granted, this period may have been 5 days, 12 days, 17 days, while I'm in another coin that I do my strategy and I'm up 10% in 2 days, 3 days. I get my target, and then of course it continues going up or sideways or down or whatever it does. But the point is, I'm making money while others are waiting. Now, granted, this depends on what segment you're in the market. let's say it's the bullish market and we're in the bear run. I'm sorry, the bull run. And everything is just going nuts. I'm talking crazy nuts. 40, 50, 80%. And those are low numbers. Like, you're upset with those. What you want to do, if you really, really want to buy prior to a breakout, what you could do is you could potentially enter here and always scale into the trade. Never go in 100%. You know, scale into the trade. Do 50% here because you think that, okay, here it's looking really good. It's going to bounce. Maybe there's some news about it. Maybe people are hyping it up. Maybe people are talking about it on YouTube. You enter it here, but you have a lower entry down here just in case, and then down here. You know, now we're in this area. Let's see if it comes down. What's the percentage? The percentage to me is extremely important. Oh, 5%, that's nothing. 10%, 11%. Okay, so I would do this one, and then I would do one way down here. So pretty much where I had them. So if it does pull back 10, 12, 15%, you have this lower entry, and then now you're going. Depending on the segment of the market you're in, depends on the strategy. If you want to know more, definitely follow me every single day, Monday through Friday. These are the current times. Monday through Friday at 12 p.m. Eastern Standard Time, Saturday and Sunday at 5 p.m. Eastern Standard Time. I show you how to trade. I show you the wins. I show you the losses. I show you the thought process that it goes behind the scenes. This is what a lot of mentors don't want to do. They don't want to give you their secret sauce, because if they do, well, then you don't need them. I mean, it's true. You know how to trade now. Why would you need them? What they want is they want recurring members that rely on, they want sheep. For me, I want to build trading warriors. I want to create trading warriors. I want to change not only your life, but the lives of your family, friends, coworkers. Just imagine this. You understand how to do this. You start getting very successful. Then you teach others. And now we get out of the 9 to 5. Now we get out of all of this hustle and bustle for what? So our dollar can go to, less than what it's worth, or you can create wealth. This is my gift to you. Every single day we go live. And then if you want, like I said, if you want to learn faster, join the group. If you don't have money for it, there should be no reason for you not making money. I show you all of my tips and tricks. That's all I got. My name is Joe, also known as TradeIntuition, where I truly do care about your success. I don't even know you, but I do. And I want to get rich with you, not because of you, unlike everybody else. I do thank you very much. We'll see you in the next video. Until the next time, let's make this money. Take care, guys. Everything that I say is from experience. This is what's going to save you so much time, so much money, and so much effort. If you want to make money, I will show you how. I would strongly recommend getting the VIP. You're going to make money. Now, granted, none of this is financial advice. It's never hopes and dreams and empty promises, nothing like that. See what I do. See if this makes you money. I give you my real life experience based off of my trainings, based off of my teachings, what I would do at that moment versus what everybody else does, because they want to sell you their course. They want to sell you all that stuff. I show you that my stuff works. Do we win? Yes. Do we lose? Sometimes. That's part of the game. But what I do is I show you all this so that you can see, oh man, I lost today, but Joe said he lost too. So it's okay. That's what I want you to realize, guys. If you like the content that I provide, make sure to smash the like button, subscribe to the channel if you're not already, and leave me a comment in the comment box. And I'll see you on the next video. And as always, let's make this money.